Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1099th edition. My goodness, the 1099th edition of Short-Term Trading Live with Oscar Carboni. Traders, wow, there's a lot of videos. Let's get into this right away. This video is being filmed on Wednesday Night Trading, Thursday, October 31st, 2013. Traders, this video here is to say, ouch, a turnaround. After such a great start to this week, Omni belts out a red Omni for trading Wednesday night into Thursday. So we make a U-turn, red Omni, and hey, what are you going to do? So we know that futures trading is extremely risky, right? It can cause substantial financial loss, and it's certainly not suitable for all trading accounts. So be careful out there. Always place your stops first. Now, traders, let me just say, I don't buy it. I don't know why it would want to go down right here. I don't have a lot of reasons, but let me show you what I did come up with. Being that Omni turned red, it's my job to show you why, and here we go. What I'm looking at here is one of Oscar's F flags. We've been in it for a while, but look what happens here. Oops, we fall out of it. Let me blow that up a little bit. We fall out of it. Look at that. So that's, just a little something to keep our eye on, right? Not really enough to scare you, but that's only one picture. So I was looking at that, and then I said, well, let's continue. Let's go look at the weekly. And when you look at the weekly, traders, do you remember this chart? It's been in my video, one after the next. And I showed you that this is the stock market, the ES Weekly, since the 2009 crash lows and the highs in 2008. The whole thing is captured here in this big parallel channel in red. Well, I also preached that we would breach the upper resistance, and I mentioned this in my last couple of videos. Well, we've gone all the way up there, and as of last night, we absolutely did breach that resistance. You see right there? Breached. But it turned around and it settled below that line today. So a little bit of a worry there, just something to keep our eyes on for the possibility of a down day coming. So I looked at that and said, well, that's interesting. Let's look around the horn, see what else is out there. So I go off to the Russell, and then I take a look at that. And when I look at the Russell, I say, well, all right, so here we are with the Russell, and look what happened here. The exact same thing as of Wednesday's close. Oops, out of the F flag. Interesting as well. Let's move the F flag out of the way. This is a long-term parallel trend line, top and bottom. Bottom here, top there. Working very well. We get above it. We have one test. We stay above, stay above, stay above, stay above, stay above. Look what happened today. We get below, and we stay below for settlement. So you drop the flag back on there, and you say, all right, now we've fallen out of the flag, basically. And we settled below it. We fell below this. Another reason to think maybe we should put the brakes on. So let's go out to the weekly now. The weekly the weekly Russell, traders, look at this. We had a bull flag, led into another bull flag, and led into another bull flag. All three were nice rallies, right? We are inside of this major parallel channel right here. Let's darken it in. Major parallel channel. Let me show you the back end of it. Major parallel channel. All the way back from 2009, right? So let me move forward now. Let's advance to where we are today. So you've had three bull flags. One was an F flag, and then we built a bull flag, a second, and a third. So now we've ran up and we've hit this resistance, which it looked like we would have blasted right through. But as of Fed Day on Wednesday, the market has come down a little bit. So here's what I think. It's probably time to build another bull flag. What do I mean by that? Well, you see this one here? What is wrong with saying that these 2 days represent your flagpole, and this is the beginning of just another bull flag? So maybe just a slight pause in the action while we build another bull flag. That's what I hope to see in the Russell, because we don't need that to fall apart, that's for sure. So then we go to the Dow Jones Transportation Average very quickly. Traders, Dow Jones Transportation Average is a familiar chart. You've seen this time after time. Once again, I'd have to say, instead of making it all the way up to the target we've been showing you day after day, it falls out of the channel. And once again, oops, out of the channel. Now, I would think personally this should go right back in the channel and go higher. But Omni has turned bearish or red, and I have nothing to say but time to report the news. Omni's bearish, so are we. So right now, what we're looking at is we have fallen out of this channel. We had a one-day down day. We don't get a whole lot of pullbacks in the S&P or the Dow Jones Transportation Average. But let's see. We're starting this day off with a red Omni. We'll see where that goes. So let's move along now. Let's go to the transportation average. Let's go to the industrial average. Dow Jones Industrial Average. You've seen this chart before as well. And here we are. You know, this is the chart with the famous 200 bar moving average. I dubbed the blue light special for the fund managers, and we bounced off it literally the day I showed it. We started to bounce. It was a pretty amazing day, and we've rallied all the way to here. Now the writing is on the wall is what we thought would happen. We'd hit the red line. We've gotten close, but we have not fallen out of this channel, traders. We are inside of this channel unequivocally, and we have not fallen out of it yet. So that's a little bit counter the technical picture I was just painting for you, for the reason why Omni's calling for a short on Thursday. This wouldn't show you that, but everything else we looked at would agree with some kind of a short. So let's go look at another chart that I wanted to show you, traders. Let's move around a little bit. One last chart. Well, this chart is very interesting, in fact, that I want to show you. I think you'll like what you're about to see here. Let's flip to a bond chart. Traders, I did show this to you in last night's video, but I wanted to show it to you once again in depth, a little more closely here. This is the 30-year bond chart. It's the weekly bar chart. Each one of these days represents a whole week's worth of trading. This is the 200 bar moving average. This is something that fund managers absolutely key off of and watch very closely. So the 30-year weekly bond chart's moving along. It gets to the 200 bar moving average and pegs 18 weeks of bouncing around here, and then it takes off. So about a year and a half passes, almost 2 years, it comes back down, and it does 18 weeks around the 200 bar moving average, and then it takes off. This time it takes off, and it takes off in 2011, and it goes all the way until now, the end of 2013, and it comes back down 18 weeks once again, and this is week number 19. It is either supposed to do this and take off, like you're seeing here, and here, or imagine this scenario, traders. We are not supposed to stay under this 200 bar moving average. As you see, after 18 weeks, it goes up. If this 19th week you're looking at here, if it decides to go down, that is an absolute definite signal. And what that signal is the bond market is truly going into a bear leg. And why would I say that? Because if you look back here, we're not supposed to do anything else after 18 weeks but start to rally out of the hole. Once again, 18 weeks, start to rally out of the hole. Here we are, week number 19. We either start to rally out of the hole or this becomes something entirely different. Then what you've got to recognize is that we're starting to build a pattern below the 200 bar moving average. So very, very interesting if you ask me on the bond chart. Keep your eyes peeled there. So traders, you know, I wanted to get this out to you. I almost can't even imagine why we're having a down day today, but my opinion is meaningless. Omni turned bearish. The market suddenly turned bearish on us on Wednesday afternoon. Omni starting off Thursday's trading session with a red Omni. If it changes and in fact goes higher, we'll let you know. But for now, we are selling the rallies. Traders, come join me at livewithoscar.com. Come into my free chat room where I will help you understand the analysis I put forth in these nightly videos. And always remember, keep your emotions out of trading. One of the best things you can do with helping to keep your emotions at bay is to say this to yourselves morning, afternoon, and evening, and you know what that is. Stops are in. Emotions are out. Traders, welcome, welcome, welcome. Thank you so much for coming to view my videos, and I will see you at livewithoscar.com.